welcome everyone to day 2 in our Certification Academy series. Yesterday we kicked it off with implementation fundamentals. As you know, making up 40% of the assessable content for our financial accounting exam that we're all working towards. Just to cover a little bit of housekeeping, we've got the wrong type of Zoom webinar, so you're going to need to use the chat panel to pop any questions in. That means it's actually very difficult for me to answer any questions. My co-host Sapna will try and answer any questions that are related to certifications or sort of issues like that. Functional questions, I would just probably ask that you might want to hang on to those as it's because the chat panel it just disappears. I can't really track it very easily. So keep any questions going in there into the chat as relevant questions as well. It's not a consulting hour or anything like that. Not here to answer any specific issues that you have. Essentially, we're here to get an overview of the content as we work towards the finance accreditation. This should remove a lot of the questions that would eventually go into the chat. When will you get the recording and slides? At the end of our series. So the series ends on Thursday.
Can we request the participants to please go on mute?
Yeah, Shilky, if you could just make sure that people can't unmute themselves and their video as well, so we won't have any further interruption. So the links to the recording and slides will be emailed 3 days after our final event. Final event is Thursday this week, so around Monday of next week you should get the collateral for the sessions that you have signed up for. So we're working towards the implementation consultant financial accounting exam. It is called implementation consultant because it does have the topics that we covered yesterday, but it also has 60% of the exam making up financial accounting topics. If we look at how the exam itself is laid out, 80 questions over 3 hours. You've absolutely got tons of time, so don't worry about that. And we can see here in red that there are 4 examinable topics from record to report. So that's your core finance processes and month end, entering journals, the setup of the organizational, the controlling structure of the company or within the tenant. We have payables management, receivables management, and asset accounting. I would like to say that this is a new exam. Previously, this exam covered also treasury, was at least twice as long to do, and was nowhere near as well put together as this. This is actually a very enjoyable learning experience for you. Very, very modern. You've got video content. You have tutorials. So tutorials are walkthroughs. Lots of good information in the text, certainly, and then you have exercises to do, and there is a lot of exercises to do in the test system that you're given with your Learning Hub subscription. We will have a bit of a look at that as we cross over into having a look behind the scenes. Overall, this is somewhere around about 40 hours of learning time. We know that there's about 10 to 12 hours in the other section there and 40 hours there. So I think one tip would be is make sure you concentrate quite well on working through the ancillary implementation topics, okay, because there's less learning content for more marks. Not hugely skewed, but definitely you should be able to pick up some good marks there. I'd probably even say that it'd be worthwhile doing the implementation consultant exam and gaining that accreditation that would give you exposure to the question bank really of the same questions that are going into this one. So it'd be a good start. Plus, you would have two accreditations. It wouldn't be a wasted one either because it would fall into the sorry, brain blank there, the project manager column in the partner accreditation. Okay, so your partner finder, so your work partners in the partner finder, number of certified consultants appears there and works towards their ranking. And the three LoB, line of business exams, so accounting, sourcing, procurement, and sales fall into the consultant side and the consultant column, but the implementation exam falls into the project manager column. So it's still worthwhile doing that other one. There we go. So this is our content. By examining the content, we do learn that within the learning journey that is provided, there is one further learning area which you can discount. You don't really need to do it. So let me show you exactly what I'm talking about. So let's jump across. Now, here we are. Really big tip, make sure you do the sample questions. Okay, that will really help you. Always do the sample questions on our exams. They'll give you a very good indication of whether you're ready to sit the exam. Then we see our content and we see we have 1, 2, 3, and 4. However, when we go down to how to prepare, we see also this one outlining the financial accounting overview in S/4HANA. You don't need to do this. Okay, the reason being is number one, it's not in the assessment. And also you'll get a bit frustrated because it's just very much an overview of what you're about to learn in detail in these other ones. So I give that a skip. We won't be looking at that content today, and that will save you a fair bit of time. Therefore, if you add these up, we've got 11 hours there, 8 hours here, 11 and 12. So we're looking at about 40 hours of work, and that would be including doing all of the exercises. Okay. The exercises are, as we travel down, well, first of all, we need to go across to each learning content. And I will explain that this is actually a bit frustrating, the way the learning exercises are accessed. Let's go and say into outlining, record to report. If we travel down to this bottom, hands-on practice, you can see that the hands-on practice just for this, which is one of 4 topics, is split into 3 areas. Problematically, once we go and open one of these, we can go across to get the system access. Just give that a little bit of a kick. There we go. Can't. And let's refresh that. I'll check my systems. I've already got it there. There we go. You would see that the exercises, which you can only access from this place, and we have a look at what they do. They only do one block there, which is a bit annoying because you'll need to go in and sort of drop one system, open up the next system just to get access to each of these blocks of exercises for each section. They are very well worth doing. And remember that the overall time that it will take to work through this, so the full 40 hours does include doing the exercises. Definitely improve your learning experience to the point that because there's so many learning exercises, you will be very proficient in the use of the system, at least at a user level, after you complete the course. So I think that's a very positive thing to do. Yesterday, I did show you how to go through and access and set up these systems. You can see how they're different systems. So F1121 actually is all of the finance course, and that's why I've got access to that. But I can't go and get the next set of exercises by opening it up without removing this and going into the next one. Okay, so just something that's going to be not terribly painful, but I just want to show you how to get access to that. We saw how to schedule your exam yesterday. Make sure you, say again, do the sample questions, please. And there we have all of our areas, you don't need to do outlining the financial accounting. And the first area we would start in is record to report. And once we come in there, you'll actually see this is a brand new learning journey. It is well written, and you can drive into that, and you'll get access to all sorts of different content. So videos, text, hover over items. It's actually pretty good to consume. Very interesting. And so yeah, it's I'm just saying this because it is so much better than the last one, which was huge. The last version of the finance exam was 80 hours of work on areas which were so random. And they weren't, where this is talking about explaining this sort of stuff to you is more like the last set of learning journeys was simply just showing you, here's the business process, J58 for accounts payable. In fact, these learning journeys don't even mention the business processes. They just look at, from the top view, how do you enter an invoice? What happens after that? So on. Well, not an invoice, but how do you do a general ledger journal? It's a lovely, enjoyable learning journey. So if we go back to what we want to achieve today, after looking at that, is I will take you through at a high level the all of the content, discussing areas where I think I can add some value. I'll skip areas where you can just work through the content in the self-learning. After me giving you quite a high level overview today, this is just designed to be an introduction to that, to start your mind thinking. You should, at the end of the next sort of 2 hours, feel very comfortable in having seen the content, and then be prepared then to go and do that self-learning journey yourself. I would recommend realistically that if you were going to do all of the exercises, you'd probably want to do this over sort of a 3 to 4 week period. It'll take about a week, really, of study to do the fundamentals side of things, because there are some exercises, not too many. You should be able to work through the implementation fundamentals as of yesterday that we looked at in about a week or so. This, I would try and do one block of this learning content each week. So week one, going to do this outlining record to report. Week two, I would look at doing payables. Week three, receivables. Week four, assets and revision. Assets is a bit smaller. Okay, so you would then be able to do assets and revision in that fourth week there. So maybe a 5 week slow burn. Okay, so this is talking about an hour and a bit each day, maybe maximum 2 hours a day. If you wanted to allocate more time to that, then of course you can, do it more quickly, because I do think it'd be valuable for you to set, as I spoke about yesterday, to set a target point in time. So I'd be looking at about a month to 5 weeks, without too much pressure, trying to do one block of content each week, then coming back to doing that. And that would give yourself plenty of time to work through all of the exercises as well. And that's the real win for yourself, because you will feel very comfortable with working in the system. And in my collateral, I do point out where we have exercises, and there's a lot of them. Okay, so you are going to get a huge amount of experience with the system. Good. So getting underway in our, I just need to try and clean up my screen a bit. I've got a little bit too much Zoom stuff all over it. So we dive in to record to report. So we're in our first block area, looking at direct finance, and we look at the master data concept and structure of the the general ledger and so on. We want to be looking at the big ticket items, which are the chart of accounts, the general ledger itself, company code, the controlling area, and so on. And we work through a number of areas there. Then you do have a couple of exercises taken from Unit 1. So when we look at the overall and this is probably, it doesn't, it's not, it isn't a complete picture, but it's a starting picture of where we're at. We look directly and centrally at the chart of accounts in the middle. So the chart of accounts in S4, we have what's called the operating chart of accounts, which is designated YCOA, and all companies share that chart of accounts or use the same chart of accounts. That then allows us, the benefit of easy reporting across companies. We do have the ability to restrict postings to certain accounts in each individual company. We look at that a little bit later on. But the operating chart of accounts is a central chart of accounts which is shared across that. Of course, the companies aren't posting into the same ledgers. They have individual ledgers where the accounts are recorded. It's just that our chart of accounts should be the same for all companies to use. We also have one controlling area which sits across all companies. So we have one reporting concept across the top there. So the controlling area is the organizational unit that really runs our internal management accounting, and that's where we do our cost and revenue collection. So profit centers, cost centers, and segments are essentially under that controlling area, and we just have the one controlling area A00 across there. People coming from a non-SAP background, you will need to spend a bit of time to get an understanding of how profit centers and segments and cost centers all work together. And we will discuss that. SAP does just have a fairly simple general ledger structure. So just a single chart of account. We don't add divisions as extensions to the chart of account like Oracle does or used to. So yeah, we have different hierarchies sitting around, and all of the different aspects are collected into a single transaction when applicable. So when we look at that central chart of accounts, YCOA, what we can see is that chart of accounts, that list of account codes, is available for use in both company 1010 on the left-hand side and 1710. You will get very used to seeing those company numbers because they are in all of the demo data and all of that sort of stuff. So if you get a starter system, this is the coding that you'll get if you choose to propagate a US company. You'll get 1710 come through. What we're seeing here is that we can influence which accounts are available in some companies. So what we're seeing there is that a certain account in the 1010 company can be blocked for posting, whereas in 1710 it's available for posting. So we're showing the first level of influence across that shared chart of accounts here by showing that we can block some of those accounts there. And we can do some more things as well with that. As we move on to general ledger account settings, so the individual accounts, usually we would use a numeric field. Okay. We also have the concept of a general ledger account type. Okay, the system needs to know what type of account a specific account is. So that's 21150, 200 account. What's that? Count 21 million, 100,000. So the system's going to need to know what type of account that is. That will help with the background postings for profit and loss calculation, which occur automatically in the background. So we want to define that as a balance sheet account, a cash account. It can be a primary cost or revenue account, could be a secondary costs account, and a range of other accounts there. So an expense account, when the system finds out that it is, okay, that was interesting. that somebody can draw on my screen. I didn't realize, please don't draw on my screen. It's going to be distracting for me, but I don't know. That, as I said, we're having some problems with Zoom. We've ordered the wrong type of Zoom meeting. So nobody get any ideas and write funny stuff on the screen, please. That was a new one. Let's put a smile on my face, seeing that in a way so far. Thanks for taking that away. Right. So yeah, so we have the account type, helps determine background postings, and it's a control over the account. We know that postings to a primary cost or revenue account are going to need a profit center associated. We know that postings to an expense account are going to need a cost center associated with that. And we know that a balance sheet account can't have a cost center associated with it. And we also know that postings between a balance sheet account and an expense account are going to have a profit and loss impact. And then our income summary accounts are going to need to be updated. So we have clearly specified general ledger account types. Again, you're going to need to get to know those. There is a defined list, and a little bit, you're not going to expect them to be what you would like any other system you've seen before. We have account groups where we can organize and manage similar groups of general ledger accounts. And we can create company code specific settings for those systems. And we can also define which account currencies are going to be done. In the controlling area settings, okay, so within the controlling areas, accounts that are categorized as primary costs or revenue or secondary costs, we can specify cost elements categories for those. So I think what you'll see that this learning journey will provide you an introduction into the world of what was called costing and profitability analysis. You'll see COPAR written around. This will provide an introduction, but let me tell you, there's a lot more that you will need to investigate in your own time. Don't do it whilst you're studying for this exam, because there's a lot more sort of behind the scenes and their interaction. But this will start off sort of at the top level and get you a couple of levels down. There's still a bit more to go after this. So the main organizational elements, we talked about the company codes. Okay, so we know that a company is going to produce external financial statements. We have profit centers. So this is when we start to get to our internal reporting within the system. So a profit center, and a good example would be a company that has two profit centers. One profit center sells products and the other sells services. And we want to run reports that are split between those two profit centers to analyze the profitability of each line of business that we have running there. Segments are something you'll only come across if the business that you're implementing into is required to do segment accounting. And that is controlled by IAS 8, so International Accounting Standard 8, which has an application across many individual local reporting standards, and they will inform you that they're doing segment accounting. I haven't had to in 25 years implementing systems have to do segment accounting, mainly because of the niche sort of areas that I have worked in. So but in any sense, a segment is attached to a profit center. Okay. Then we have basically a roll up there. So if someone selects a profit center, the segment will be derived from that profit center. There is a strong, a very clear direct relationship between them. Functional area. Okay, so a functional area is something that we might have a look at in a few slides down. Okay, if you're not aware of functional areas, it's a different way of reporting, which looks at the cost of sales and specifically at a range of different functional areas, and it presents a report based on that rather than sort of the nature of an expense. And nature of expense would be something like salaries or travel costs or things like that. Functional area is something like administrative costs, sales costs, research and development, production or marketing. Okay, we will have a look at that momentarily. Let's move into the next section, still looking at the basic concepts. There's a couple of little uh, exercises for you to tackle as you're moving to this. Not a big section. Posting documents. Okay, so everyone's heard about our universal journal sitting right in the middle of our system. Basically, it's a giant table which just collects all the transactions for the system. So we don't use subledgers. Well, not quite. There's additional links that might contain information which look like they're a part of the subledger. But yeah, basically we have a very big table called Act.A sitting in the middle. It's got 300 plus columns, information stored on it. So we basically store everything in this giant table. And we can do that because we're running on a HANA database. And it can take a couple of billion transactions before it starts to slow down. So let's not get too diverted from that. And we can see that there are postings into that. And let's have a look at some of the requirements of those. So let's look at the structure of our financial document. So the core financial document is a journal entry. We know that it's the last, it's the end of the line in the business process. Or it might actually, you might do journal entries at a number of points in the line on a business process. Journal entry is the entry onto using the chart of accounts, posting into the ledger. So the ledger is where we collect all of the entries. Document header for a journal entry contains things like the company code, document posting date. So we have the periodic concept in accounting, which is transactions should be matched into an accounting period, of which usually there's, we work on a monthly basis or there are derivations of that. And then we have a journal entry type. Okay, and I think we can see that down there. So SA is a journal entry type, and that tells us a little bit of information. I think there's probably something like about 75 different journal entry types in the system, and it will tell you the source of this journal. So this SA is basically just that's your standard general ledger document, and you might have in that list of 75 different codes, there'll be one for a customer invoice, there'll be one for a supplier invoice, there'll be one for each of the types of documents that can end up in here. That journal entry type then allows us to easily distinguish where this came from just by looking at it. It does have a number of other controls. Okay, so we can use it when we get to period end control. Is one of the three facets we could use to control period end. We could just say, okay, we're not accepting any more customer invoices past this date type of thing. But it also does tell us that, and it also controls the underlying journal entry number. Okay, so we see our journal entry number there beginning with 1. That'll be because it is this SA document, and we get different journal entry numbers based on the different type of journal entries that we have coming from the subledgers or subsystems. The line items, we have special information provided throughout there, which is basically debits and credits. They need to add to 0 for it to balance. Again, a pretty simple accounting concept. And then we can post that through. So this is our journal entry type there. You can see that there is 75 different journal entry types, and each of the different types of documents that we have throughout the system has a different code there. So D helps us realize that it's probably coming from the receivables ledger, and we can see that's all customer related documents there with the D. So even though there's 75, you'll probably recognize the key ones pretty quickly after working with the system for a small amount of time. So how does that impact? Well, how do we use them? Well, the system will automatically propose them based on where it came from. We can use it in reporting, so easily to identify the different transactions. Use it for searching documents in the system, and yeah, a range of other purposes as well. Okay, I'll probably skip that exercise. These are links live in my system, which will jump into a tutorial system where we can sort of present and talk about things from there. So let's jump through now. We're up to the key elements required for posting general ledger documents. This is at least the first time I would probably recommend that you jump into the system if you've missed some of the other ones. But posting a general ledger journal is something that's probably the first place to start when you start working with a new system. Okay, so we start having a little bit again into those journal entry types. So after the introduction that we had in the last section, we can find that journal entry types can help us categorize different financial documents. Then we have the journal entry types also allow us to indicate what are the mandatory fields in the document header during posting. They also drive the numbering of the financial documents. Okay, so we saw before that the journal entry drove the number to start with 1 in the actual journal number itself, and these will then map through that. It's in your implementation, you can change all of these settings, but you never ever should. Like, just leave it alone. I think I've done it once when I started out, being a little bit of a pedant and wanting to do things my way. I think I might have done it and decided actually this is a lot of work for no valuable return. Remember, we're doing a fit to standard system, so you shouldn't be fooling around with things that you don't need to be changed. Okay, we can have different settings between different companies. Journal entry types can be valid for all company codes, but you could have different numbering intervals. Configuration settings also allow decisions, numbering continuation at the beginning of the new financial year. So quite a few different settings around journal entry types. But as I said, then it's not the type of thing that you should be worried about changing. Posting key basically tells you, the most important thing it tells you is whether it's a debit or credit. Okay. So as a transaction goes in, if it's a 40 in the posting key, indicates that it's a debit. If it's a 50, it's a credit. And that's probably the simplest explanation for that. Posting periods in the system. So we all know about posting periods. So say we've got a calendar year, begin on January the 1st, would end on December 31st, and we'd have 12 periods through there. Those periods would be numbered 1 through 12. The system will automatically derive from the posting date on the document what period it should go into. Okay, that's pretty straightforward. Periods need to be kept open and in order to be posted into, and there's a range of different settings that we can set to close periods at the end of the month. And we'll just to quickly talk about special posting periods. If you watched yesterday, one of the first things you must do when setting up your S4 public cloud system is in central business configuration, you need to determine your fiscal year variant. The standard fiscal year variant, certainly if you're going to be setting up your starter system, is usually the calendar year with 4 special periods. Okay, so that's the standard one. You set that, then all companies, essentially you should set it to be what your group are required to report as. And you set that once and you can't change it after that. Okay, so you are in a bit of a problem if your customer, after a few years, says, "Oh, we're changing our group financial reporting period." I've seen it happen from time to time. Even worse is when they decide that they're going to change accounting standards. Yeah, so I'm not sure if there's any way of what you do after that. We've had to re-implement on some occasions, and they're never very popular. So in any case, your special posting periods, so those extra 4 posting periods, if anybody's aware of the period 13 concept, essentially the most common example of using a period 13 is audit adjustments. Okay, so at the end of the financial year, your auditors come in, they go through, and as an example, they might say, "Well, we don't like the look of this debt you've got over here. So we want you to, put a provision in for doubtful debts in. And you might be saying, well, I think I'll get the money out of the guy. And the auditor said, no, we don't think you'll be getting the money. Or we're worried about it, and we're very risk averse. So what you would do is you would post that the audit adjustments, you get a list of them every year. You post those into the period 13, which means that you're not affecting your, normal 12 periods, and you can report on those normal 12 periods very easily because you just say exclude special posting periods. But then when you come to generating your financial reports, you can show your period 13, your adjustments, and report on that as well. So that's what we use special posting periods for. Count assignment objects. So these are things that appear. It's a very even I can't see that down there, but we'll dive into a demonstration of entering some data, and I'll point it out again there. So when we enter information and we select general ledger account code, we may be required to make account assignments. Now, the account assignments you're required to make, well, at the first level will be things like the cost center. So if I'm going to an expense account, the system's going to say, well, you need to put a cost center to that. Then from the cost center, system will say, well, this cost center belongs to that profit center, this profit center belongs to that segment, and then it should populate those through, hopefully. So we start collecting different account assignments. The other sort of things we could assign a cost to might be a work breakdown structure. So a WBS element exists in a project, and we could use that for doing assets under construction, things along those lines. But there are also a number of other ones in here, things like sales order item, and so on. And these will then flow into certain profitability calculations. Functional area could be determined. Some of these will be automatically generated. Some you should enter yourself. And there's quite a lot of, again, layer 3 functionality down in here, which the learning journey doesn't look at, but at some point in time, you'll need to get an understanding of that. So how would you actually create this posting, and what effect does it really have if you tag it to a sales order? Right. So essentially, the account assignments will also actually, from the scope, the things that you scope into the system. For instance, if you scoped in real estate management, then things like building numbers could be appearing down here, things like that. So it's going to depend on the scope, going to depend on the account you're posting to. Some of it will be derived from other components. Some you're going to need to enter yourself. When you go to post a journal document, what are the key bits? Well, you need to put your dates in, your company code and accounts, and let's have a look at a very simple demonstration of what entering this is as I step through that. So we go to post general ledger journals, tile. Number one, we're always going to enter the date. So if we do today's date, the posting date will default to whichever date is entered here, but you can override this, remembering that you can only post into open periods. So the journal entry type has been derived by the system because it knows I'm entering a general ledger journal, so the type is SA. You could change that as well. But again, that's a level 3 learning, I would think, as to what's the actual effect of you doing that. In our company code, which we've selected here, we can see that that's propagated down here. We could do intercompany postings as well if we'd set that up. So you could have different company codes in each line, then the system will do, automatically do the background postings for us. The currency set, we enter our debits and credits. There we go. We can see here that when we pop this open, there's a range of different fields that we could add there. And a lot of those will be very specific use cases. The T account view, I can't personally get that to work, but that does show in T accounts, so an accounting sort of concept, what it would look like, this transaction. Okay, so we're going to enter another document here, and I think this time, well, when we get there, we will be adding in additional things. So we're putting a tax code. There we go. An account assignment, adding it to a cost center. There we go. And what I wanted to point out, you see all of this stuff down here, a lot of these, mainly because of what has been scoped into the system. There we go. And those have to total to 0. Need to calculate tax on that. We could simulate the journal entry. So that'll basically go and then show you, right, these are the postings that you would expect. And off you go. As we move on to the next main lesson, performing different posting procedures. When we're dealing with documents, we can actually change them. Yeah, the general rule is once a transaction is posted, that's it. You can't change it. Well, there are some things you can change within documents. They don't have anything to do with the valuation. But what you can change is things like the document header text. So your explanation of what the document is there for, so you can amend that. The reference, in case it's been incorrectly entered. But at the document line items, we can also make changes to posted documents and even payment related information there. So payment terms, the baseline date, due dates, and payment block. Otherwise, the item text could be changed and the assignment there. When we reverse journal entries, very simple process. You can take a journal entry and essentially just click the reverse button and off you go. Document hold principles. So we hold transactions or journals in the system, and they can be put on hold rather than if we're unable to complete them at the point in time. So you can hold our document, we can then complete it and post it. But yeah, so it's just a small piece of functionality. We then move on to some very specific SAP functionality. You don't see this in many other systems, and that's open item clearing within a general ledger account. Okay, so most people will be hopefully knowledgeable about open item clearing when it comes to customer invoices and payments and supplier invoices and payments, and we have open items there. So an unpaid customer invoice is an open item. Essentially, we can apply that functionality to a specific general ledger account. When we apply that into the account, it means that debits and credits should be matched against each other and then be cleared off. And you can see that there where we've got 550 and 550, they clear off. We could run a report then or show a screen which would only show the open items in there. Moving on to analyzing and reporting our accounting data and displaying financial statements. When we look at this, you should spend some time in your test systems learning all of the ins and outs of the user interface. It's a very useful thing to do as you start out, and also with the reporting. Do spend a couple of hours sort of kicking around the reports, all of the different buttons and what they do. That's the best way to learn. Press the button, see what happens. So let's have a look at this report here. Start that off. Good. Right. So we go to the balance sheet and income statement, our statement versions. So you can have multiple statement versions. And because what we're referencing, there will be a financial reporting structure in the background. That'll include, a balance sheet statement. It might be the income statement as well. In fact, if we select the balance sheet here, we'll be able to use all of these tabs to display our different reports. There we go. We can see the balance sheet. there. We can expand all of the accounts through here. And we're using adapt filters that will then throw a field up onto the screen for us. We want to add in the segment. And now we can filter this balance sheet by segment data. So, when the segment is recorded against that, we can see that we have three different possible segments, A, B, and C in our demo data. And there we go. It's going to display that for us. And now we've got a balance sheet by segment in the system and visibly showing that. Now we can show that in PDF view. And off we go. So it doesn't look too bad for an external report. Now, all of these, because S4 Public Edition comes with the pre-configured chart of accounts, all of the financial statements that are delivered with it are compliant with the accounting standard that you're going to be using. Okay, so when you build your system, everything comes pre-delivered. This is what it's all looks like. So your ideal situation is you convince your customer to accept, the standard operating chart of accounts and work with that, because all of the reports are already written for you. If you go and create a new chart of accounts, or you also need to be aware that actually, there's some very good functionality I would raise with you. If you create a new account, you can use something called a semantic tag for that account to indicate the type of account that is, and then you can create these reports just using the semantic tags. Okay, so where we've got, well, these are quite specific, but yeah, using a semantic tag to indicate what type of account something is, then automatically drops it into reports which have been built using semantic tags rather than the individual GL accounts. Just something to look out for. As I said, you'll do yourself a favor if you spend quite a bit of time working through this. It's sort of, you only need to do it once in a way. Learn what happens, with your filters. The other thing I would do is I always save a big list of reports so that I can just go and drop down where we've got standard there. I've got to drop down to every single type of report with each type of favorite variation that I'm going to use. Good. Let's drive back to here. And describing postings to meet the internal and external reporting requirements. These are starting to get a bit more interesting, each of these exercises. So parallel accounting. The learning journey itself, I don't think really gives a great explanation as to what parallel accounting is. So I'm hoping that you're all a bunch of finance experts and know what it's all about. Parallel accounting is much more than just, two different, charts of accounts, collecting, information. It does extend right through the system on all valuation topics. Okay, so basically we support and I'll just talk about this at the simplest level, because with many of the things I've sort of pointed out, well, there's a lot more behind that. And the next thing, there's a lot more behind that. And there is a lot more behind even what I'm about to tell you. So we have our leading ledger, which is 0L, and Waikoa, chart of account would be used for, for the accounts set up for that. We would post into that. Then we can also have additional ledgers. Okay, so we could have 2L and 3L. See how you got 0L? Okay, so that's, we also have, 2L, which is the IFRS chart or ledger, and then we have US GAAP in 3L. You can fool around with that if you wanted to do it a bit differently, but that's how it's generally scoped in. And within each of those ledgers, a ledger is a complete set of accounting books self-contained. Okay, so every transaction that occurs throughout the system feeds in to each of our defined ledgers. The first thing from yesterday when we were in CBC, it goes through we were in central business configuration that says, right, okay, you need to define your group ledger. Is it going to be IFRS or is it going to be US GAAP? And at that point, we could have said, right, yes, we just want IFRS. So that would then create our parallel accounting with the 2L ledger. So that's a designation of that IFRS ledger. And within that, each ledger you can see here that basically each ledger represents a different accounting principle. And the accounting principle can mean many different differences. You might, for one asset class, for instance, according to one accounting principle, depreciate it at 3 years and over 3 years at a straight line method, and for another accounting principle, it might be 5 years. That's one of the examples later on. Okay, so it's not just having a separate chart of accounts where it collects information. Even the underlying postings can be different. The sale of an asset with revenue involved gives you a different posting to entirely different accounts in US GAAP and IFRS. So we have quite a lot of very specific functionality which fully supports these accounting principles and all of the different complexities of each. And you can see that the flexibility there says, well, parallel ledgers meet specific reporting requirements such as currency translation, which is different between that valuation methods, which I just talked about there, with assets and fiscal year variance. So there's lots of different things there. So it's quite a deep process to understand all of that with some accounting background. But the important thing is that we do it really well. When you roll it out, though, just be aware that there's quite a lot of background work that needs to be done to maintain the two ledgers. Okay, so if you're going to a company which doesn't have it, just be aware to take some time to make sure that they're fully comfortable with the extra work that they'll need to do, and that extra work that they're going to do needs to be, more than the value of having those multiple ledgers should be recognised. I haven't quite said that quite right. What I'm trying to say is there's a fair bit of work involved with the accounting staff to maintain multiple ledgers. Just make sure that the company accepts that. You come to a place like the UK, nobody would even know what you're talking about with multiple ledgers, because mostly IFRS and UK GAAP is very similar. So businesses don't need to run that too often unless they're owned by a US company. I mean, maybe they've got to do US GAAP reporting. Segment reporting, we can see there segments belong to profit centers, cost centers roll up to profit centers, and then the profit center rolls up to the segment. So document splitting is the term that we use there. So an individual document could split between multiple profit centers, and again, there's a few layers of complexity sitting behind that, but it's at its simplest level. A profit center rolls into a segment. Cost of sales reporting. This is where we look at our functional area analysis. If you imagine, well, don't need to imagine the chart of accounts. For instance, a couple of expenses in there. One might be salaries, and the other might be travel costs. When we go and do our traditional reporting, those would fit in to the salaries, travel costs, and they would fit into our profit and loss on those lines. What cost of sales reporting does is actually look at the function those secondary expenses actually supported. So we can see how we got staff costs there. So we have direct costs there for production. Okay, so those go into here. Secondary costs, which are salaries of the R&D team, research and development team, they don't go in at the staff cost level. They get assigned to the R&D functional area. And because they're not direct costs of sales, so direct cost of sales would be like, in building something in production, the fixed, costs and depreciation of the equipment used in production, all the ancillary services like the sales department, the admin department, R&D, we take all of their costs and instead of reporting them as salaries, we just lump them in to this group here. And then these would appear as lines there. And we can see the overall cost of it just from a different angle. Okay. Hopefully if you haven't seen that before, it makes a little bit more sense now. This probably isn't the best slide I've seen to explain this because what it should actually show you is the report that you would see and basically see what you see is product sales at the top, cost of sales there. So that's everything that's directly attributable to the production of the goods. And then it will say, right, sales costs here, admin, research and development, as the secondary costs which have fallen out. So you get sort of a top line product cost and revenue less all of the ancillary costs. What do we do to close the general ledger? Well, we have a range of pre-closing activities and then closing activities. Quickly having those in the period, we use the posting period variant to do our month-end control. And we've got 3 different places we can do that. Document header level, so plus icon there. We can just switch off altogether. We can put controls on the day of closing for documents from different areas. So we know that D comes from the customer area, and so on. And then we can also say for specific ranges of general ledger accounts when they should close. So some complex little things in there. Note for your exam, you don't need to know how to configure all of this. You just need to know, what are the different ways of doing it. So the exam will look at the, probably the L1, L2 level, but not going down to L3. As we move on to recurring journal entries, okay, so we run these. Recurring journal entries is simply a template that we've created of a journal, and then we do a run to create each of those individual journals from that template, and we post that through at month end. What type of things we put in recurring journal entries? It's going to be things like amortization of insurance expenses, because you pay your insurance up at the beginning of the year, and then you want to, according to the periodic concept of accounting, you want to split that cost into the relevant period for that. So let's say our insurance cost was 1,200 for the year. We paid that at the beginning, and then we want to amortize it. So take it out of prepayments and drop it into insurance cost at about £100 a period. So that's how we can use a recurring journal. We need to do foreign currency revaluation. That's great. So that would work on any GL balances. So that's something we can do, which a lot of systems won't do. And then we have financial statement versions, and then that's working with our parallel accounting concept is that we can produce our reports in, compliant in different areas. So we've got group reporting, so which is IFRS, and we do that. Maybe we're doing that out of the 0L ledger, and then we company code 1010. We might be running that out of something like 2L and then 3L there. So different ledgers then supporting different group reporting concepts. Right, let's move on to payables management. We'll have a 5-minute break about halfway through, so another 15, 20 minutes. Payables management, we take a bit of time to move through that, but then receivables management is a bit quicker because we will have discovered already the mirror that is payables and receivables, especially when we come to things like the business partner concept. So what is supplier master data? Well, the core thing that we have is the business partner concept. So a business partner in the world of SAP is really an holistic view of all the entities that we may interact with So that list of entities could be people, our employees, for instance, could be organizations, companies we buy from or sell to. And what we do then, so we have a category there. So there are three different categories of there. It's very important to differentiate and ensure you get it right is people as opposed to organizations, because people are protected by GDPR. So we have to be careful when setting up business partners, so we don't set up a person as an organization. And we store general data. We store lots of things on general data, including the name, the address, contact details, bank details, which I find very interesting. It goes in there. But yes, we're saying that this person or company has one set of bank details, which may be shared by our companies. And then what we do with this general business partner data is we can extend it there. And there's many different roles in the system. So it's not just a supplier or customer role. There's, I don't know, maybe 18 different roles, quite a few roles. And with the role that we want to extend them to, if they're a supplier, is a supplier for financial accounting and perhaps supplier for materials management and logistics. We can also see the example here that we could extend them. They could be a customer also. So we have the company code there. Record that. What types of information do we want to record for supplier and financial accounting? Well, their reconciliation account. So this is the control account that they'll be posted to. So if they're a supplier, then it would be the payables ledger account. So their open items from them. So supplier invoice will be posted into this account. Their payment terms that they give us for payment, things like that. We also add them to a purchasing organization. The purchasing organization defines how they work, how we work with them in a way. So that's a grouping of there. We discuss that in the sourcing and procurement topic. And then we can see that very similar sets of information, but this is what it is. So a individual or a company can take many business roles, but is that one list worldwide? Where does this become an issue? Well, if you're building a system and you're bringing in 3 or 4 different companies into that, they have to start, change their, listing and how they work. So this is a very SAP concept as well. We have a look a bit more at the different components that we have there. And let's move on. There's quite a few things that we're recording into the business partner. I suppose that really does bring me to a point of talking about master data in an SAP system and how important it is for you as a consultant to understand what functionality does that master data drive. We don't just collect the master data for no reason at all. We collect that master data to drive automation, to drive processes, to drive specific pieces of functionality. So it's important to understand, especially when you get to data migration from a new customer coming in. Remember that it's most likely a greenfield site, or it will be a greenfield site that you're bringing into S4. Your data set that you get from your customer is probably going to be nowhere near wide enough when it comes to the master data that you're bringing into the system. So they're not going to have a concept of a lot of things we have. So you'll need to pad that out. So really important that you do get a bit of practice around that before you do it for real. And certainly on your early implementations, make sure you test your data conversions all the way through to make sure that you actually got the full set of data. I've made mistakes years ago, and you can get around those mistakes now, but we couldn't back then. You're missing just basic stuff like, who's their contact. We missed a contact field on an upload once, and problematically, we had to get a temporary person in to go and manually enter thousands of contacts. You don't have to do that anymore. But just as a story about when things go wrong with master data. Right, as we move on, master data maintenance methods. Just the topic list here. The learning journey goes into each of these in more detail. How do you create customer? Well, learning journey says a great idea to copy an existing customer. That might make sense if the customers are very similar, or do the same type of thing. Remember that we do have a lot of master data to collect. We can run a duplicate supplier check. So the system can do that automatically. Additional company codes for suppliers to be very common. So you'd create a supplier, link them, make them available for a company 1010, and then you realize, well, they're actually dealing with the company 1710 as well. You don't create an additional business partner, for that. You have the one business partner, then multiple company code links for that business partner. The same with additional roles. We don't have a business partner for the selling to and a different business partner for the buying from. Just the one business partner with two different roles. Supplier modifications, that's tracking changes. So you can use an app and you can track changes to suppliers. Always exciting thing for the accounting department to see who's changed the bank details and all that sort of stuff. The 4 eyes principle, so we can tag fields that are sensitive, and therefore that will trigger a validation. So that's a pretty cool type of thing. So you could say that, well, if somebody goes and changes this field, it needs to go into a sort of an approval mechanism, and it looks like that over there. And then we have supplier mass maintenance, which we can do. I'm not going into these exercises because I'm keeping an eye on the time. We're almost up to halfway. And yeah, maybe we'll just stick to, we'll try and keep the time so we can cover the whole content basically. Right, so moving on to processing incoming supplier invoices. Here is where we are in the overall business process. We will have a look at, we will do the demo on the overall process because I think that's the best way to learn. And certainly when it comes, let me talk about that when we get to it. Right, so processing supplier invoices is where we go next. In the invoice life, so the invoice arrival is coming in, goes through processing, correction. Okay, if the invoice isn't correct, and we have a look at our three-way match a little bit later on. Then we move on to payment preparation, the payment and the remittance advice that we send out. Different supplier transaction types. So when we're going to enter an invoice from the same form, we can enter either an invoice, which will basically mean that we owe them some money. Credit memo is a refund we're getting from a supplier. Perhaps some of the goods are defective. So we enter a credit memo, and then we can use that to apply against other invoices or purchases that we make from that supplier. We move on to the concept of a subsequent debit and a subsequent credit. So a subsequent debit is applied directly to that. So it might be an additional charge. Why do we want to use things like debits, subsequent credits, concepts of landed costs? Okay, so we want to, we purchase some goods or a container full of goods from somewhere, we might get the insurance charge and the shipping charge comes through. And then what we can do is we can apply these as subsequent debits and credits against that initial invoice to, keep it sort of, all of the related costs the same line item. So let's look at an exercise here. Nice little quick one. Having a look at creating a supplier invoice, where we go to create supplier invoice, and you can see our drop down list showing the 4 different types of invoice there. We choose the company code. We enter the gross invoice amount. What you're probably thinking, well, why do I need to enter this? Why doesn't it just calculate it off there? Well, this is, remember, we've got the invoice next to us and the invoices come in and we want to make sure it acts as like a check, doesn't it? So because we'll be entering the line items down here, and then the system's going to want to check, well, does that add up to what is on the invoice? Grab our invoice date, reference, so that's the invoice number itself from the invoice we're entering from, and that is the invoicing party that we're receiving that. There we move on to entering our GL account line items. There we go. I have a debit or credit indicator. So because of the supplier invoice, you would select debit there. Okay. So that's not the easiest thing to think of, but remember the people who'll be doing this do work in accounting. It might just be me that always has problems with debits and credits. So we enter our account, so it's the postage account, enter our amount as 2000, and then we enter a tax code. Cost center, check that. Invoice was successfully checked, and then we can post it. That's an invoice without a purchase order. So a very simple process. And there's credit memo creation. All of these exercises are available in your learning journey. I would recommend that you step through the exercise, but then also complete the actual exercise in your test system and maybe do a few variations yourself. Press a few extra buttons, add a few extra bits of information in. Just make sure that you're to learning all of the aspects of that. When we get invoices coming through, we quite often might put them on hold. So holding a document allows us to save a draft invoice or credit memo in a very basic form, so without all the data. Why might we do that with supplier invoice? Well, we want to register it into the system, but our problem might be is that we don't know what the coding is supposed to be. So we might want to enter it on hold, then send a message across to the person it was addressed to at the business and say, hey, we've got this invoice. How should we code it? So that's why we use the hold functionality. Once we complete it, we can save and post it. Parking functionality allows for one person to enter and then a second person to go and look at that. So it ensures a two-step validation process there. I don't think this happens too much anymore. Remembering a lot of this is going to be replaced by uploading your invoices that are coming through. So, and then having them, go through the AI to post them and everything like that as well. So parking is it's a concept that's been around for a long time. Quite labor intensive though. But that then does allow for that visibility of a second person checking it. What apps will be used to analyze our supplier accounts? We would display the supplier balances app and manage supplier line items app. And we can see there that the line items give us the vision of the clearing status. Remember that supplier invoices that are unpaid will be shown as not cleared or open items. And that as we do the payment run, for those, they will then clear off that way and become cleared items. What else can we do? We can create recurring journal entries. Why the best use case for that is something like your rental agreement, so premises rental. Perhaps we just have an agreement to pay X amount each month. We don't receive an invoice for it. They're just expecting payment. So what we do is we set up a recurring supplier invoice entry, which creates the journals from the template we create. And that would run then. You can see that would be popping in each May, June, July, and so on. We can also upload supplier invoices. That's where you get your PDF and upload it. Or we can import them from spreadsheet. What can we change? This is the same as our general ledger documents. You can see there that we can change some interesting stuff around the payment terms, due date, payment block, and so on for our supplier invoices. Right. Okay. Now the next section is quite interesting. That's our link into materials management. We're purchasing goods. So I think now is a pretty good time. Oh, it's bang on time to take a 5-minute break. So I'm going to pause the recording, go and get myself some more coffee, and we will come back in 5 minutes and work through the remaining content for the next hour and a bit till the end of the day. Good. So pause recording, resume the and let's have a look at our overall sort of source to pay setup. So demand generation will be run by possibly the MRP run, or a person sitting behind a computer screen, perhaps an invoice. A sales order has come in, and the sales order is requesting an item which we don't have in stock. So we would then look to the MRP run. We'd go create a purchase requisition based on ordering that good. In the generation of that purchase requisition, we'd have a look at determining the source of supply. So where will we get that from? Will we transfer it from another warehouse? Will we get it from a supplier or something like that? Move through the supply selection stage. So selecting the supplier, creates a purchase order, sends the purchase order to the supplier. And then we have the goods receipt. So the supplier ships the material to us. That comes into our warehouse. After a little while, the supplier invoice would arrive. We go through invoice verification. So we take that invoice, we check that invoice to see if it matches to our purchase order price that we had, check to see whether it matches to the quantity received on the goods receipt. And once it passes invoice verification, we move to payment processing. So pretty straightforward process. Let's have a look at our three-step verification, often referred to as a three-way match. So what is the three ways that we're trying to match? Okay, so as we know on the purchase order, we create that for a supplier. We say we want 100 widgets at 10 euros each, coming to a total of 1,000. We send that to the supplier. First thing we see, we note that there's no financial impact of this. The first financial impact, the first document that we created is from the materials document here, which is a goods receipt. The goods receipts, goods come in, and we receive those 100 items into inventory. That's where we see our first posting there into the material stock account. So that might be finished goods ready for sale. And the other side of that, the credit side, goes into the GRIR clearing account. It sits in there. Whilst we wait for the invoice comes through. Now let's imagine that this invoice comes through that's saying, yes, we've sold you 100 items, but the price is 11. Perhaps the new catalog came out in between, and we hadn't updated properly. So we've expected it was 10, and actually we're going to pay 11. So we would agree, okay, yep, right, 11. So you can see now that we've got 1,100 being posted into and there. So we've got to pay our supplier the 1,100. So what we arrive at is a situation where we have 1,100 on this side of the IR. So the IR side coming in 1,100, the GR side is coming in at 1,000. There's a difference in here. So essentially we clear this difference at month end when we do a GRIR clearing run. It would go through, it would analyze this initial posting, where did that go to? And it would, depending on a number of factors, try and post across there. So if that had been an expense account, then it would take that 100 and push it across to the expense account, materials account, depending on how you're doing your stock valuation, whether it's moving average or or standard cost, it would move it to replicate what would happen over there. But that's that's a materials management issue, really. But that's the idea. So it's taking this money and then pushing it back to where it should belong on the other side. Outlining the KPIs. Well, actually, let's have a look at some of the KPIs. I think let's have a look at the accounts payable overview app. You see the accounts payable overview. You also get the accounts receivable overview app. And when we get there, we set it up. We need to filter it for a company code. As I said, I always create plenty of drop downs from here, and you can even just say which one's your default. So every time you come into this, it'll come up with the data that you want. Hit go, and there we see a bunch of lovely graphics. Really important for you to know how these work, how to create KPIs, because you really need to teach your customers how to do this. This is where they'll get huge value from the system. Um, when implementing cloud software, you need to move away a little bit from the on-prem concept of, well, I'll do it and I'll charge for it and make money from it because I'm adding value. You need to move more towards becoming a teacher and teaching your customer how to do things, because it's a different selling motion. Okay, we want to sell public cloud as a volume sale, so lots of projects over and over again, um, and also at a lower cost. So yeah, really focus on learning how to teach people how to do these, and create their own cards, create their own things. They'll get a lot more value out of it. Um, and trust me, you get bored of doing this, the same building stuff all the time over and over again. But yes, first teach yourself how to do this. Good. So as we look at the different cards, we can then drill into those. They have underlying there, and we can see that we can sort it by different ways. Top tens, we can amend those as well. You can create your own. You need to learn all of the different settings through there, and off you go. So payables aging, drill into that, and we can see then this is a traditional concept report where the aging is based on the day. So less than 90 days, 0 to 30 days, 1 to 30 days. I'm not sure what is that? 31, 31 to 60 days, and to the different brackets. There we go. That data doesn't look quite right to me. Anyway, there we go. So a range of different reporting methods. Good. I was just thinking there was something there. I was not. Oh, it's on the other side. Uh, right. You can pay manual invoices, but let's look at the automatic payment process. So what we do is we create a payment run there, and within our payment run, we want to do payment proposals first. So the overall idea in our automatic payment run is that we create a payment run. The purple color is mandatory. So we need to enter a posting date, and then documents entered up to a certain point in time. So supplier invoices is what we're looking at specifically, entered up to a certain point in time. Payment controls, so which company or companies we're going to pay for the next payment date. So the system's going to want to know when you will do your next payment run, so that it only pays documents which are due by up to the next payment run. Okay, so we don't want to be overpaying. You must never overpay or pay early. It's a bad idea and terrible for your cash flow. What payment method you're going to do. So are we going to be doing, BACS transfer or things like that? BACS is the UK, or electronic transfer, let's call it that. Then we can specifically, bring it down to, customer or so on, or different sections of selection. Then we schedule that proposal run. First, invoices are selected, then they are grouped into different areas. If the system cannot find valid payment methods or valid bank details, it adds it to an exception list. Okay, so these are in the exception list where we're missing relevant master data. So we're coming back to ensuring that our master data is correct and complete. And it generates the proposal list and the exception list. So you work through your exception list in order to fill in that missing data. You look through your proposal list, and then from that proposal list, you would edit it. So the user can interact with that to go and edit it. And this is an optional step. Okay, you don't need to do that. You can go straight from a proposal to an automatic payment, automatically selecting them or executing them. Then we move on to scheduling the payment run. So what does the payment run do? Payment run will post the payment documents in the general ledger and clear paid open items for you. So that will remove the open items. There's all your postings for taxes, discounts, and all those others there. And it will supply the payment media. So payment media is the physical file that you need to upload to the bank if you're not using an integrated scenario. Okay, so if you're not using, a plugin, to a bank, then the system will create a payment media file for you for upload. And then you can go across, load that back into your bank. So transfer the payment media to the bank, the payment advice notes, and the payment summary to print administration. So this is essentially the part where you're transferring to the bank and you're taking your remittance advices and sending them out from there. So after your payment run, you've got the payment log, which records what you paid, payment documents themselves, the payment advice, so that's a remittance advice that we send out, and then the payment media is the file that you upload to the bank to transfer that. Let's have a look at yeah, 100% go and do this. Run the payment proposal, execute the payment run, and have a look at creating invoice in a single payment. But yeah, you want to really make sure you know this process because it's a bit long-winded, really. Right, monitoring supplier payments. And this is a report that we can run in the Monitor Payments app, and that tells us the status of our payments, whether they're new, whether they're in approval, approved, sent to bank, completed, or have exceptions. That is sort of our central working space for looking at the payments going through the system. Period and closing activities, we'll just have a quick look at those. You want to do your GRIR clearing run. That's a fundamental step. Foreign currency valuation run if you've got any supplier invoices in foreign currencies. And now we are on to receivables management and heading into our last sort of 50 plus minutes. The good news is when we hit receivables is that it's the business partner concept is a mirror pretty much of what we had a look at in the supplier invoicing there. If we look at, don't think we did the exercise on the last one. Probably a bit too long to do given our time constraints. So let's move back to this. But yeah, you should, you really, if you're not used to the business partner concept, do spend some time with it and really get to know what data is required. You are going to probably need to, in that data conversion, as I said, build up that data because the customer's just not going to have some of it. So what are the key master data points? So quite a bit different in some places. And I'm just going to pick out some key ones. Dunning. Okay, so we have Dunning data there. So we got 5 main points: correspondence, finance, withholding taxes, Dunning data, text, and attachment. So Dunning data, we look at Dunning later on in there. So I'll go through that in more detail. In the payment data, you'll come across tolerance groups. So what do we use a tolerance for? So tolerance is how much you're prepared for the customer to overpay or underpay and just accept it without it sort of, creating an exception for you. So you might say, well, up to 2% or up to €5. That will be our accepted tolerance for when we get underpaid or overpaid. Then we have things like payment reasons, payment terms. So this is the default value that we apply to invoices for our customer. When we get to payment transactions, payment methods, so we might be doing things like direct debits there or SEPA for use with that sort of stuff. And then we're also recording things with correspondence. So the accounting clerk at your company, so at our company, and then who they deal with at the customer and how to contact them. So that's the contact information for what would probably be their accounts payable department. And why do we want to record things like this, well, we're going to need to chase debt. Okay. And that's what we want to be doing there. Sorry, my screen's jumping about a little bit. And let's look at the different master data maintenance methods. So again, we saw this over in the other side. We've got the 4 I's principle. We've got customer mass maintenance. We've got a change log we could look at. We can copy an existing business partner, create a new one. We can extend to several company codes. It's all the same things because we're dealing with the same object. We're dealing with a business partner. So there's not a separate sort of customer list and supplier list. It's the same list with different attributes. So end-to-end processes in open receivables management, quite a lot of exercises to work through. You'll be doing interesting things like manual clearings and automatic clearings. Okay, remember that a document is cleared. So an open invoice is one that's unpaid. When it's paid, then it's closed. Or it's cleared, sorry. Customer invoices and credit memos. We see that customer invoice is posted into the system. I think those accounting entries are a little bit awry there. I think I'd rather see the general ledger entry on the debit side. I struggled with this in this morning's sitting because it's not the same postings. Well, I don't know. Let's just accept them. Maybe it is. Okay. And we have credits, which we can apply. And we can actually have a look at an exercise there, which might be creating an outgoing invoice. So we create outgoing invoice from over there. Select our customer. Go, we found one there. Invoice date, 30th of the 7th, 2023. And enter into the box there. The reference, the amount, calculating tax, choose a tax code. Then we can start entering our postings in there. See, we need to select a profit center here because it's a revenue and all revenues will need to belong to profit centers. Yeah. Searching for a profitability segment. We go. It's all in lovely SAP GUI. There we go. So you do see that the SAP GUI does still exist throughout the system. Certainly sales orders, it does as well. I'm not exactly sure why these haven't been updated. They've had plenty of time to do it. Let's head back there. Sales order to receivables integration. Okay, so that's where we have a sales order being in. So this is our long lead to cash process flow. And if we have a look at that, we have a sales order gets entered in the system. There's no financial document associated with a sales order. Okay, as it comes through, the first thing we do is then move to shipping. So this will sit, with the the shipping manager or the warehouse manager, the fulfillment manager. They'll go through and have a look. Well, the sales order needs to be delivered, next week. So let's get the shipping underway. They'll then create an outbound delivery. It'll go to picking. So someone will go and collect the stock off the shelf. It will then go to a goods issue process, and that goods issue will then create the financial document and the journal entry. What it does there is reduce the inventory, increase the cost of goods sold, and then what we see there is a billing document is created, which is an invoice, and that increases our revenue and increases our receivables. Accounts receivable overview. Okay, so that is, the mirror image, or not quite the mirror image, but it's, again, we saw the accounts payable overview. Days sales outstanding is more important than days payable outstanding. If your days sales outstanding starts increasing, that could be an indicator that there's things going wrong in your collection, and it's going to have a big impact on your liquidity. Okay, and in certain jurisdictions, you're going to need to be paying the VAT on sales that you made before you actually receive the money in. So that's why we want to keep a very strong grip on the day sales outstanding. Day sales outstanding is the difference between, from when you've sold the good to when you collect the cash. Customer payments. Okay, so as we work through there, we can see we can do manual payments, and we can also process from incoming files. So the main point of processing occurs with our bank. We would receive money into the bank and that they goes through a process. With incoming payments, if we get a complete payment, you can see that that works out all right. Everything's ticked off and the item is cleared. So the invoice for 8,000, we got 8,000 in cash in and that's cleared out. If we have a partial payment, okay, so if we only get 5,000, we can treat it as a partial payment. So the 5,000 is applied to the 8,000, leaving 3,000 as an open item. There's also the possibility to do what's called a residual item, in which case the 8,000 invoice is closed and becomes it's a cleared item, so it doesn't appear anymore. But then a residual item for 3,000 becomes available there. I've not seen this used. So I expect it might be some sort of industry sort of specific setting, or certain countries want to do that, but we wouldn't do that in the UK. So we usually go to posting a partial payment. So reason codes categorize the incoming payments, allowing organizations to understand why payments were made or adjusted. So if somebody is short paid you, they might tell you why, and you can assign a reason code for that. So reason codes are used to identify the reason for invoice adjustments. Might be a price change, discount, disputed items, and so on. So our incoming payment files, well, this is the main way that we get the cash in to the system. We import our bank statement. Then that goes through an algorithm. The algorithm will then try and match the incoming payments. It'll try and match them against a customer, first of all, and then perhaps, if it's lucky, against a specific invoice, and then clear those open items. So what happens when that doesn't work? Okay, so we can influence that algorithm in there. It's not much of an algorithm. It's like an analysis, and you can put some rules in it. We also have SAP Cache applications, so an AI or machine learning based add-on that we can put in here, which will then learn from what a user does to be able to do that in the future. So we go into a status of post-processing, where we can amend the rules. So we can either manually. So first of all, we need to identify our unmatched payments, do a manual review. So the finance can review that. We can do manual matching there. We can update the algorithm again, get it to do post-processing again after we've updated it. How do we handle accounts receivable and dispute management integrations? So we have a credit and collections concept in the system, which we can integrate to. It's called dispute management and cash collections. We can then mark individual invoices as being in dispute. That would go into a workflow for a specific user, and we can create that dispute case. And what we do then is chase that debt by getting in touch with the customer, and we can do things like promise to pay and so on. So promise to pay is when you talk to a customer and say, yeah, we promise to pay by next week, and you can put that in. and you can record things in there. You put your notes and so on. What are our period end closing activities? Well, let's talk about the dunning process now. The period end activities are fairly similar to the accounts payable side. You're going to need to do your financial revaluation for the different currency fluctuation. We also look at the specific dunning procedure. So what is the dunning process overall? So dunning is a process that we run when customers haven't paid us on time. It is very much driven by local laws and requirements. Okay, it's very strict in places like Germany, where if you don't follow the rules of dunning, you're going to have a lot of trouble recovering the debt. Much less onerous in places like the UK. So in any case, you have dunning levels. So dunning level, 1 through 9, mostly is my experience is 1 through 3. So level 1 might be, hi, hope you're well. We see that you haven't paid this invoice yet. Can you please pay it? It's overdue. Level 2 is, hey, we rang you, we contacted you last week or a month ago, and we see that you haven't paid the invoice. You really need to pay it. And then level 3 is, right, we're sending the boys around. I'm sure it's much more regimented or prescriptive than that, but that is what you do. And you release those letters to the customer based on the dunning intervals. So the interval might be in days. So the first one might be a week after you haven't received payment. The next one might be after 3 weeks, and the next one might be after a month. But again, these intervals may be defined by local laws and requirements. Minimum amounts to be done. You're not going to send a letter to someone to chase €5. And if it's applicable, you may be able to charge interest. Okay. You can't just decide, right, yeah, we're charging 50% interest for each week that you're overdue, because I don't think you'll get away with that. It's very strict, this part of it there. Okay. But you might want to charge interest because you're paying interest on, or not having that cash in your bank account or stuff like that. But it is very strictly controlled. You'll need to set up the dunning process in accordance, with your customer. So you work with them to set it up on what rules and based on what they're doing already. Good. So dunning blocks, what you might do is put a block on certain line items. They can be blocked for dunning. Okay, so if you wanted to exclude specific items from the letter that you're sending out, you can do that. And the overall dunning process is based on doing a dunning run. So you set your dunning parameters, schedule your dunning run, usually at month end. Then you get dunning proposals from that. You can look through those. You can block certain things from them. You can reset blocks that are existing, change your dunning levels, and then you actually create your dunning notices. They'll go through the proposals, whatever changes you put on the proposal, and create, the letters that it will send out. What are we doing? Closing activities. Well, the only one I picked out there, because the rest were pretty much the same as accounts payable, is that a year-end thing that you might do, which is a little bit different, and you might not come across this too often, is to send a customer balance confirmation. And usually that will be driven by your auditors. Your auditors will come in and say that, right, okay, we've had a look through your accounts receivable register, and we've chosen these 10 customers to write to, and we want you to write to them, and they will come back and they will basically confirm that the balance that you say they owe you is what they think they owe you. Okay, so why do you do this? Well, if you're going to commit fraud, that's where it's usually hidden, from what I've seen, in my experience. So basically, I'm not going to tell you how to do it. What people do is when they take the money, they create, you can create invoices, okay, that are due for payment. That'll balance things out. It was very rudimentary. And but like about 10 or 15 or 20 years ago with systems back then, you could do stuff like that. Right, we're up to, sorry, asset accounting processes. So our final topic in the last sort of 30 or 40 minutes. And let's go through assets. As with the other areas, we look at the master data first of all. Oh, let's look at the life cycle of fixed asset. First, we acquire our fixed asset, then we use our fixed asset, and whilst we're using it, we depreciate it. Depreciation is a process where we reduce the value of the asset as we use it up. Okay, so, or its value diminishes. You know that when you buy a car, that next year it's going to be worth less than what you paid for it this year, unless it's fancy Porsche or something, which might be worth more. But generally businesses don't buy them, certainly not for use as assets. Um, so we buy an asset, we use it up, and then we retire it either by selling it or scrapping it. Right, the number one big ticket concept is the asset class. So our asset class is the most important means of structuring our fixed assets for reporting purposes. So number one, the asset class will control the asset number that is assigned to our assets. And we can see that in the system, all of these come pre-built in the system. You're not setting these up, they're all built. Okay, so 1100 is buildings. And when we start purchasing things that are going to the buildings, you see that they'll begin with the number one. And then if it's the main asset, it'll have a 0 at the end. Sub assets then have numbers 1, 2, 3, 4, 5 afterwards. So we have sub assets as well, but our main asset has the designated -0. So that's what our asset class does. The second important function, it connects the asset to the corresponding accounts in the general ledger. We can see the buildings will be stored in this account in the general ledger. It'll also define the accounts, the accumulated depreciation account and the depreciation account itself. Then we move across to the next thing. It also supplies default values when we're creating asset master data. So default values for things like the depreciation key. So depreciation key is something like, well, straight line depreciation, reducing balance depreciation, and also the useful life. So it will do that for us. It's a very important piece of information. Then we have our asset accounting master data maintenance. We enter a description. So we have inventory numbers, last inventory on. So last time it was checked that it was still there. So it's lots of information we can store. We also have this concept of time-dependent data. Now, time-dependent data means that it can change and that it changes at a point in time. So the cost center, so this is the cost center will receive the depreciation postings, and those depreciation postings will go through it each month. And we might say that, from next month, we are going to change the cost center to a different cost center, and that would start from the 1st of next month. We could also change the plan to location or so on. The asset value data is the depreciation key and the useful life. Remember that these will be defaulted in from the asset class, and we could override those. Depreciation key is the type of depreciation you're going to do. Is it going to be straight line depreciation, so the same amount each year, or reducing balance? And there's tons and tons of different depreciation keys. Depreciation key will also hold things like when should you start depreciation? At the beginning of the month after you purchase an item, the beginning of the month of the purchase of the item, and there's a whole lot of rules around that, and they're very much defined by the accounting standard that is in place. So let's work through creating main asset. So we go to manage fixed assets. We've got a nice big list there of our 6 assets of the business. It's only a small business. Then we go to the create button. We're going to create a 3D printer. There we can see that select our asset class, machinery and equipment. We go. And we can expand that screen. So we'll give our asset a description. We must assign it to a cost center. You can see also that you can assign it to a WBS element. The plant. So the plant is the physical location of a site, where it is, and maybe where it is on that plant. So we're assigning it to the financials cost center. Now we can see that these are the different ledgers that we're running in the system. So we get the 0L ledger, which is our leading ledger, and we also have the IFRS group ledger. The learning journey doesn't talk about depreciation areas, okay, but a depreciation area is fairly common when you set up your assets. You have a different, it's basically, see how we've got different books there or ledgers here. A depreciation area is just a separate book for storing the asset values based on different rules. You have one which is the leading depreciation area, and this will post actually into the ledger, but the non-leading ones don't post. They're for informational purposes, and often it's for tax. You set up a depreciation area for local tax because your tax rules are invariably going to be different to the accounting standard rules. Your tax rules will, for motor car in the UK, says you can do it 3 years reducing balance, whereas IFRS says it's 5 years straight line. Okay. What this does is allow you to calculate your tax amount due in the system. So it doesn't post into Ledger, but a depreciation area is just a separate book for, basically most common use cases, tax. There we go. So that though is the leading ledger for 2L. But so that will post into the 2L ledger, IFRS. That one will post into the local chart here. Got your depreciation key, and then the useful life in years. That again you enter there, and that should default from your asset class really. We can see that there are different keys for that, and then different useful life according to the different ledgers. And we can create it. It's a main asset, meaning that it's -0 at the end. We've only got main assets down here. Good. I won't go into the second one. Let's head back. So asset master record creation with sub numbers. Okay, so that's when you've got the 3D printer, but there might be additional components that you want to keep a record of. They need to be connected, but yeah, they're in sub numbers, and then they get -1, -2, and so on. How do we post asset accounting transactions? Look, there's a whole list there. Post retirement by, sorry. Scrapping, post retirements with revenue, analyzing assets, and all sorts of things there. A very good way. Assets itself is pretty straightforward. Like there's not too many ins and outs of that. And I think we've covered most of them. I think the only area the learning journey doesn't sort of cover is that depreciation area, which is actually fairly common to use. Classification of acquisition methods. Okay, so how can we acquire assets? Well, we can acquire them through the accounts payable ledger. We can acquire them from posting. So you can create an asset by pulling the money out of a clearing account. So that would mean that you got an invoice comes in for an asset you purchased, and you post it to a balance sheet clearing account rather than to the asset ledger, for instance. Maybe you don't know what you're going to do with it just yet, and you post it in there, and then you pull it out later on, post it into your asset ledger. Asset transaction posted from materials management. So we can do that in procurement with the reference to a purchase order. The assets are posted and capitalized during the goods receipt, invoice receipt process. Okay, so that's when we use it from a purchase order. That's probably the best and most common way of doing it, because you're using that purchase order there, and then it automatically gets into your asset register directly from the goods receipting process. And WBS element settlement, this is what we use to do assets under construction. So we create a project and we look at that. The course does look at that in a fair bit of detail. Transaction types. Well, what you need to know about transaction types is there's a certain type of reporting when it comes to assets, and it's often called a schedule of fixed assets. So what it does in that schedule of fixed assets is show you on a row what the asset value was at the beginning of the year. And mostly this line would probably be at the asset class level. So you'd have your asset class, so buildings. So at the beginning of the year, we had 0. We acquired in that current year 20,000. The depreciation for the current year was 4,000. That's the asset value. So this is a specific style of report called basically it doesn't sort of call it out, but it is the schedule of fixed assets. You'll find that in most accounting standards. How does the system know what goes in there? Well, it tags the transactions with a transaction type. There we go. So 100, and so on. Somewhat similar to the sort of transaction codes that you'd need to send to a consolidation system. But let's not go down that direction. But yeah, that's what the transaction types there is, so that you can create that specific style of reporting. Asset value date. Um, why is this important? Well, we need to start depreciation based on the asset value date. And there's sort of a number of different dates that we have. So the asset value date, the capitalized on date in the system, first acquired on, and then you've got the depreciation start date. So it's the depreciation start date is determined based on the asset value date. And sorry, and the period control method specified in the depreciation key. Okay, so the depreciation key that we saw before, which might, I think it was LIN or DNS or different ones there, that will say things like, well, it's straight line depreciation. You should depreciate the same amount each year, or it should be reducing balance. But it also indicates when you should start there. There is their LINs. So they're all deciding that you should start at the beginning of the month. Depending on this depreciation key, it might be the first day of the next month. That's common. Or, if it's the 5th, it might say, well, the first 15 days of the month, you start at the beginning of the month. If it's the last 15 days that you've first acquired it on, then it will be the first day of the next month. Okay, that's what you need to know about that. Fixed asset scrapping. Exercise to work through there. You can see the different effects in different ledgers because they've got different values. Now, if that was a scrapping with revenue, what you could actually see is different accounts being posted to. I think I've talked about that earlier on. I think this is getting fairly close to our final topic, utilizing assets under construction. So assets under construction master data. So what we do is we need to create a project for this. So, and it's what's called an investment project. So we assign an investment profile to a project or work breakdown structure element, and all or part of the cost then go through a settlement process. So we have periodic settlement, and then we close it all off with a full settlement. So a periodic settlement from time to time, we'll take, what we've collected on a WBS element and either move it to a asset under construction element. And then when we get to full settlement, it'll move it through to an asset. And I think it's better probably shown there. So the key takeaways actually there is that they have their own asset class. That's because they shouldn't be depreciated. Asset under construction master record is created by releasing the WBS element or project with an investment profile. Costs and services are posted to the WBS element. So you're collecting all the costs associated to it. Periodic settlement credits the cost of the WBS and the debits the asset under construction. Full settlement credits the asset under construction and debits the new asset. Okay, so in the meantime, we're collecting on an asset under construction, the asset register. But at the final settlement, we're taking it all out of this asset under construction and putting it into a new asset. That's sort of a step through that we work through where we create a project, release it, complete it, and close it. When we're creating settlement rules, we have to, the costs for the asset under construction debited by the end of the month, done through a periodic settlement. Settlement has two options. You can do it by a period. So all debts to the receivers in the controlling with the preliminary settlement rule are settled. The costs are internally settled to the asset under construction, or periodic settlement is performed as with the by period method. An investment project element is technically completed. The system automatically selects the partial capitalization processing type. And I think this probably shows you the best sort of vision of that. So as we go through, we have an investment profile against the work breakdown structure element. Let's take this one. Through the month, we're posting into that. The settlement rule there for the periodic settlement is saying that 10% should go to this cost center. Then 90% is posted to the asset master, but into this asset under construction. Okay. And then in our full settlement, we can then have a range of different rules in place. So we could create two assets out of this asset under construction. We could just, everything goes to the third asset. Or we might even take some money out there into the cost center. So the difference between a periodic settlement takes from the work breakdown structure where we've collected the costs in the project and pushes it across to the asset under construction in our asset register. And then the full settlement takes from the asset under construction into the actual asset itself there. Why do we keep it in a separate bucket? Well, number one, you don't record an asset under construction in your general ledger in the buildings or area. It's recorded separately, and it's also not something that you can depreciate it yet because it's not in use. Managing depreciation. Okay, so we've talked a lot about depreciation keys and useful life. That essentially comes up with a percentage almost that gets to be applied in your depreciation calculation. So you take our calculated amounts there, and then we create the depreciation through the system. Do that via depreciation run, where we perform the depreciation test run first. Correct errors timely. Sure, correct errors on a timely basis. Or before you finish, I don't know what correct errors timely really means. Perform that depreciation run, check the status of the depreciation run, correct the errors, repeat the depreciation run. Optional, all errors must be corrected by the year-end closing. The depreciation run cannot be reversed. Great. That's it. We have managed to work our way through all of the content actually about 15 minutes earlier. I probably could have run a few demos on a few different things. I hope that has set you on a course to being able to confidently approach the learning content. I think it hopefully has helped you with some background understanding. The learning content is fun, it's enjoyable. Get on with it. I would, as I said, maybe book your exam for a little ways out. And before you drop off, could you please complete the poll. This is a new course, well, new content mainly, because the we have just got this new drop of this. So yeah, if you could complete the poll for us, give us an idea. We can sort of then look at the poll across all of the deliveries, and that might indicate to us whether some of the content's not great or that. But yeah, this has sort of just been put together fairly recently. Hopefully, it has helped you. I do wish you good luck in sitting the exam. I would also say that you should really be only focusing on doing one exam at a time. Okay, so if you've booked to come to all three sessions, I think that, it won't be good for my statistics for you not to come, but just focus on doing, say, finance first. We run these every quarter. Okay, so, probably next May or something like that, we'll run this again. You could pick up the next version, or actually you could just grab the recording and have a look through that. I'll just pop open the chat. I see that there's been quite a lot in there.
Yeah, Adam, most questions were answered. So if you can actually bring your attention to the last message that was popped in there, those were the summary of the questions that were sort of not answered yet. So if you can address just the last message, I think we'll be good with Q&A.
Right, I'll answer the ones I can off the top of my head. So, how to assign a new general ledger account in financial statement report? You go to the financial statements versions, and you can go and add it in there. I think I talked about semantics. Okay, so you should try and incorporate semantics in those reports. It's going to make it a lot easier for you if you're adding a lot of new GLs. The SAP help is very good if you want to learn about how to work with the general ledger itself. Um, I think that after you go through the learning journey, you're probably going to have quite a few questions. It's not as deep as it, oh, it's not as deep as it could be. I think I mentioned that a few times that, wow, there's still more on the other side. Use the SAP help after you go through this because it'll help with your understanding, especially when you get to that GL topic. It is really well explained in the help itself. Also, there's blogs. You've got expertise services if you're dropping questions in there. I think that first question from Yvonne in public, can you add numerical document classes? Not sure exactly which class you're talking about there, whether it's can you add your own account like document types and stuff. Don't really know what that one's actually referring to. Link for Treasury and Risk Management Learning Journey. It's there in just have a search for it yourself. You'll be just as quick to find it as I would be. But yeah, it is split out. I think if you just type Treasury, it's going to come up in there. And as an aside, as a consultant, you will need to go and learn about the bank concepts, especially when you get to that. So just go into Treasury and learn about bank and a little bit about cash management as well. I think that ideally they probably could have got into this finance course. Um, is asset calculation done in multiple currencies? I don't think so. Oh, it will be done. Yeah. Oh, yeah, probably. Gee, they're good questions, these. I know the problem, George, that you're talking about there. I would expect that we do handle that because I've seen that problem before where does it respect the historic exchange rate? No, I don't think it would actually from an accounting perspective because it's a closed transaction. No. Um, that's an interesting question. I need to think about that, but I don't think it'll do what is required to do as to the accounting standard. Okay. What I think you're talking about there doesn't actually fit in to being a within the accounting standard. Carlos, is cash management included in S4 public cloud? Yes, it is. Dispute management, credit manage. Yep. Yep. If you're probably referring to what's available in private cloud, well, what's in public cloud could be a little bit different. But yeah, there is dispute management, there is credit management where you plug that in. You'll see in the learning journey, cash collection is referenced. Where would you go to learn about that? I'd go to Process Navigator, and then you could look up the codes there to see whether it's available in public cloud. How does the costing module operate in the cloud? Is there any certification only for the CO module consultant? No. Costing module will work mostly the same, but there's no sort of separate thing in there. Can we create new asset classes? Yep. Another number ranges. You should be able to do all of that without too much problem. You can disable asset classes that you don't want to use. Yeah. So right, we're sort of moving through the questions. Can we create?
Actually, Adam, if you don't mind, I just need to steal a minute from you. I'm having some difficulty getting in touch with our technical host, so I'm not sure if you can hear me. If you can, please can you come back online and launch the poll? We are trying to launch the poll, folks, so please give us a couple of minutes. Or
Hi,
maybe
Sapna. Yes, yes. So I already launched the polls and participants giving their feedback over there. I can see.
oh, I'm so sorry. It's not visible to me. I'm so sorry about that. Thank you so
No,
much. Adam, sorry,
no
back
issues.
to you.
Good. Yep. Can we create custom depreciation methods? I know I've run into it before. I don't, not sure about the answer on that one. You've got me on the spot. I've never tried to do it myself. I would have thought you probably can, but I'd be very careful with making that statement. You custom depreciation methods is one of the questions where you're probably heading into a localization area. And what you'll find is that the customization method that you'd only need to do a custom depreciation method if you head into a non-localized country. And with our localization concept, you should be able to use a depreciation method that was created in a different country. Like a long, long time ago, we went to Poland and right, yeah, so in Peru, the date of the document and not the posting date is used to determine the exchange rate. Is that setting per configuration? You would be able to influence that. Yvonne. Right. Okay, so we're pretty much there. Thank you very much, everyone that's completed the poll. Scope item companies cannot be deleted in the dev system. You're saying that if you scoped an item in, you can't delete it after you scoped it. Right. These are all the things that you want to just get into a system and kick it around until it breaks.
Yeah.
We don't do that very often. People are asking questions about things. Have you tried to break your system? No, I haven't tried to. I'm too frightened. If anything goes wrong with it, I'd have to fix it.
We are
Good.
obviously super happy that you guys are opening up and asking all these questions. So that's great. But of course, like, what Adam said at the beginning of this session, this was not sort of meant to be a consulting hour. This was mostly to focus on the learning journey with the intent of walking you through the learning journey so that you are better prepared to attempt your certification exam. So if you do have any specific conceptual questions or questions on the scope of the S/4HANA Public Cloud Finance topic itself, again, our best guidance to you is please go through the learning journey, go through the help portal, or attend the learning room, the Learning Hub live learning room sessions. Because if you actually go to your Learning Hub subscriptions, and there if you look for live, against every learning journey, you will have something called as live learning sessions. Click and participate on those live learning sessions, because those live learning sessions will teach you about a lot of the concepts itself, much more at a much more foundational level, before maybe you can appreciate some of the topics that are being taught over here. So that's just a suggestion in case some of the concepts were not addressed here. We didn't have the time. But thank you so much for your time, your feedback through the polls. We hope this session was useful to you. We have procurement tomorrow and sales day after, so please feel free to join us back again tomorrow or day after.
And just one more.
Yeah.
Yeah, you can use the Expertise Services website for these questions.
Right.
Okay. So I'm going to drop that into the chat for everyone. And I would recommend that you first, I think I've talked about this a number of times in our lessons, is to go to that website and search the help there, because there's 5,000 or 10,000 answered questions. You're not the first person to think of some of these. And certainly if the question isn't answered, you can pop it in there, and those guys, that depreciation question, can you create your own depreciation keys and stuff like that? You drop that in there, that'll be answered very quickly, because, they'll know the answer to that. They'll have an asset expert who would be able to sit in that. Someone, I think Eric's just asked, what's tomorrow's session? Tomorrow's session is sourcing and procurement. But I would say to you, don't bite off more than you can chew. These sessions that I'm doing are very high level overviews. They're probably they're really designed to get you started on working through a single learning journey at a time. Yeah, you get an overview for something in a couple of hours, but you can also access the recordings of these if you signed up for them. We also run them every quarter, but the key reason we're running these sessions is not to train you, it's to push you towards getting your certification. That's the really important thing. You're making an investment in time, go and get your certification, then move on to the next one after that. Good. Okay, so thank you very much. Thank you for the feedback. Very promising. Thank you for all the thanks. And yeah, for people coming tomorrow, if you are coming, I'll catch you then.
Thanks, Adam.
See you.
Thanks, everyone.